Hey yo, it's your boy Captain Blue. We are back with another video. Make sure you click that subscribe button if you are interested in what the boy is cooking. Let's get it. So today we are looking at Nasdaq 4 hours time frame. I'm going to show you how you could have caught this beautiful sell right here using the CRT plus inside bar model. You understand? So let's get into it. Right. So first things first, right? You go to your 4 hours time frame. When you get to your 4 hours time frame, you need to find your key level. You understand? Finding a key level, it's like finding your daily bias, right? After spotting your daily bias, then you know where the market is going for the day, and then you act based on finding what your key level, right? So this is Nasdaq, right? This is Nasdaq. As you can see, when is today? Today it's Tuesday. Let's mark out today. Let's separate yesterday from today. Today is Tuesday. Where is the candlestick? Okay, here is this one. So here you want to trade today's movement, right? And then you don't know what to do. This is a candlestick for today that started exactly at 12 until now. You understand? Look at the time. It's 9:49. So yeah, so now you can see that Nasdaq created an overall high, then it started pushing to the downside, creating lows and breaking them, right? And then from here, where is your key level? Your key level, it's this supply zone here, right? As you can see, the market gave you a supply zone, came back, mitigated the supply zone, then it closed below your supply zone. When yesterday, right, the market failed to close above your supply zone, right, meaning it respected your supply zone, right? So since the market respected your supply zone, what are you looking for in the charts? Obvious, you are looking for what? A bearish movement, right? So this is your key level, which is your supply zone, right? And then obvious, that means if you are selling from that level, you are going to be targeting what? This demand zone here, right? So let's get into it, right? So since you are done identifying your key level, so, and also remember, other people can also use a fair value gap, right? The market also gave you a fair value gap, so it's up to you which one you wanna use, supply or a fair value gap, right? Even if you spotted this fair value gap or used this fair value gap, you could have just waited for the market to come and mitigate the fair value gap. As soon as it closes below, that's your confirmation that you should start looking for selling opportunities, right? And then today, which is Tuesday, that's where you could have known that, okay, I'm looking for a bearish CRT, right? So let's get into it. So we remove everything, right? So you know we are using CRT plus inside bar, right? CRT plus inside bar, we use more than 3 candlesticks to get a CRT setup, right? So since we use more than 3 candlesticks to get a setup, let me show you how you could have traded Nasdaq today, right? So let's start. We also traded this move. TP was hit, profit was made. You understand? So let me show you how to do it, right? First things first, you go to the 12 o'clock candlestick, right? That opened. You mark out your range because of that's the only one that gave you your range, right? It gave you your range, which is your CRH here, right? It gave you your CRH there, and then let's put this at the right corner, right? It gave you your CRH exactly there, right? And then from there, yes, you could have marked this low here as your what? As your CR low. So but with me, since I'm looking for a big move, I won't be using this one as my take profit, right? I'm going to use this one as what? As a break-even point, which is what? It's liquidity. Remember, I'm coming from a smart money concept background. You understand? So whenever you get a strategy, you need to modify it into a way that you understand, right? So this is my what? It's my liquidity area, where if I get an entry, that's where I break even, and then I continue holding a risk-free trade. So but where is my CR low? Right, my CR low is this one here. This one here, that's the previous low that I see in the market. You understand? That's the previous low that I see in the market, right? So you just write CRL, you understand? CRH, right? Just write CRH, and then just like that, you understand? So you got your range, which is your what? Your CRH, your CR low as your take profit, and then you got what? Your break-even point here, which is your liquidity area. You understand? And then what's left to complete your setup? A total soup. Remember, we don't take any trades without finding a total soup or a liquidity sweep. You understand? So since it's like this here, this is where we got our setup. Obvious, we're looking for selling opportunities, right? Since the market respected our key level. So meaning we were expecting a total soup to the upside at the CRH. Then we do what? Then we look for what? For selling opportunities. So here the market swept the range of the 12 o'clock candlestick and then closed below, right? Which this area the market gave us what? A TLS or a liquidity sweep. Just write TLS, which is a total soup. You understand? And then just like that, you have a complete CRT setup. You understand? You have a complete CRT setup. So with this, if probably you're confused, remember to follow my channel, watch more of my videos, then you get to see how I trade CRT plus inside bar. You understand? So with me, I'm trading it differently from whatever you will come across, whatever video you will come across. You understand? So this is how it is. This is the complete setup on the H4 time frame, but you don't get an entry on the 4 hours time frame. You understand? So now what do? You need to go to a lower time frame. So with me, I prefer the 15 minutes time frame. You understand? So when you get to a 15-minute time frame, we only have 2 entry models. You understand? On the 15-minute time frame, we can only enter the market if it gives us a pullback at our supply zone or our fair value gap. You understand? You need to see which one the market gave you, or which one is the market respecting between a fair value gap or a supply zone. You understand? So let's go to 15-minute time frame. We jump straight to 15-minute time frame. On a 15-minute time frame, you will come across something like this. This is your setup, right? This is your whole setup on a 15-minute time frame, right? So since we are only interested in where the setup is, this is how you are looking at it. The market opened here, right, and then came back down, then came back up, gave you a total soup, and then by New York session you got an entry. You take your entry, break even, you let it run. You understand? So on let's just refine these zones. So on a 15-minute time frame, you are looking at something like this. This is your whole setup. You understand? So let's take, you haven't got this move yet. You understand? Which is the distribution move, and then this is the manipulation move, and then this is the accumulation move here for the day. You understand? Accumulation, manipulation, distribution. You understand? What? Accumulation, manipulation, then distribution. It's AMD. They call it AMD. So here, that's where the market accumulates, and then here, that's where the market manipulates, tricking people to thinking this is a break of structure, the market is buying. You understand? That's why it's called manipulation. And then from there, distribution. That's where the market just distributes to your overall target. You understand? So let's remove that. I'm sure you understand. You understand? So yeah, so when you check here on this chart, right, the market gave you a TLS, right? Then it started pushing to the downside. You understand? You wait until the market gives you what? A supply zone or a fair value gap, right? Inside what? Inside the CRH. So when you check here on this move to the downside, the market never gave you what? a supply a fair value gap. You don't have a fair value gap exactly there, right? So but the market gave you what? A supply. What is a supply? A supply zone, it's the last bullish candlestick before a push to the upside, right? Where is our last bullish candlestick before a push to the downside? Here it is, here, right? So that's your supply zone there. That's your supply zone. You write supply zone. You write supply zone, right? So what do you wait for? You got a supply zone. After that, for you to confirm if this supply zone is valid, you need a break of structure to the downside or a change of character. You understand? And then here you got what? You got a break of structure to the downside. You understand? That gives you extra confirmation that your supply zone is valid. You understand? You got a BOS there. You understand? Since you got your break of structure, there is your break of structure. And then what do you wait for? You just wait for the market to give you a pullback into the supply, and then from there, as soon as it closes below, you just take your entry there. You put your stop loss just above the supply, target the CRL, which is the CR low, and then just like that, TP hit. You understand? And then here, this is your break-even point. You understand? Since with me, I'm coming from a smart money concept background, whenever it hits this level on my side, whenever it sweeps this liquidity in the middle, I move my stop loss into break-even, and then I continue holding a risk-free trade. You understand? I continue holding a what? A risk-free trade. So just like that, that's how you could have traded Nasdaq today, which is Tuesday, 19 August. That's how you could have smashed Nasdaq using the CRT plus inside bar model. You understand? So yeah guys, we have reached the end of today's video. Make sure you click you like, comment, share the video, and then don't forget to subscribe so that you can keep receiving more videos like this. You understand? Even updates. So yeah, let's see each other on the next video. Take care.